Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, November 28th, and we started this week like we ended last week with soybeans advancing again. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn continuing to stay pretty much the same around 349, losing half a cent on the day. Wheat in Chicago was down 6 3/4, and beans continuing to defy gravity, gaining 9 3/4 cents, closing around 10.55. Although we had been up as much as 19 overnight, with the Asian markets trading substantially higher. News today was kind of limited overall. Really what's driving soybeans is the action in Asia, where soybeans on the Dalian exchange are really heating up. They were up 26 overnight. That pushed U.S. beans up as well. In addition, palm oil was up, gaining more ground, about 5% in the last week. And so overall, you have the Asian factor that's driving things. You also have a large amount of fund money coming back into the bean complex, especially soybeans and soybean oil. We'll see what the CFTC says later today. That report normally coming out on Friday, but because of the holiday, it's now coming out today. So that will show us just how much length they have added to their long position. Some expect about 30,000 contracts in soybeans. Overall, there was not much else to really sort of gravitate on. Monday brings us export inspections. Let's take a look at what USDA said in that realm today. And overall, a pretty dismal week for corn and wheat. Wheat in particular coming in very low at 222,000 metric tons versus expectations that have consistently ranged from about 300 to 500,000 metric tons. So that's disappointing. Corn coming in at the low end, or just below the low end of expectations at 800,000, also disappointing. And beans coming in towards the high end of expectations, but not necessarily knocking it out of the park, but a solid 2 million metric ton week for soybeans. So the story continues to be good soybean demand, good soybean movement, which is keeping this market afloat, even though conditions in South America continue to be very, very favorable. Weather over the weekend was nearly ideal, with Argentina seeing rain where they needed it. The outlook for the next week also looks favorable for parts of central Brazil where it's been dry. So overall, there's very little to gravitate to in South America that suggests that the crop is having any sort of problems. Obviously, still early in the growing season, but at this juncture, it looks favorable for South American growing conditions. In addition, on the bear side of the equation is the prospect of higher U.S. soybean acres in 2017. We don't know for sure. USDA, on the other hand, will be releasing what they call their baseline projections, which is just their economist forecasts of what acres will look like in 2017. So it's not survey based. We're expecting somewhere between 2.5 to 3 million acre increase in soybean acres, although some analysts are saying anywhere from 4 to 5 million acres may be in the cards. So these numbers, while not a game changer, will be something that we'll be talking about tomorrow, and traders will be looking at around 10 o'clock Central Time. Overall action in soybeans, we started Sunday night in positive territory and just continued to move higher, going all the way up to 1065 around 1 o'clock in the morning Central Time before peaking out. We did trade lower into the biscuit break off of that 1065 high. We made several attempts throughout the trade session at 1060, but never really closed, or never really got back there on the close. But the close was sort of two-sided. Certainly you had a lot of selling activity, but every sort of dip in the market was met with buyers. So it's a market that seems to have a lot of strength at this juncture, and I would attribute that to fund action and less to fundamentals right now. So overall, it's a market to certainly be paying attention to if you're a producer. If you haven't priced some of your old crop beans, by all means, I think these are good opportunities. We're seeing basis levels weaken every time the market moves up. Today was no exception. We saw Cedar Rapids bean plant off. We saw the Mexico bean plant off. We've seen a lot of basis drops, as the market has continued to move higher. So, not only looking at old crop, but looking at new crop with futures well above 1030 right now, potentially giving farmers the opportunity to lock in $10 on new crop beans before you even plant an acre. So I think these are good opportunities to be looking at in light of some of the fundamentals that potentially could weigh this market down in the part of 2017. That's all we've got for today at Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation with live quotes, cash bids from over 4,500 different markets, tech alerts every morning, visit us online at grainhedge.com and take a free demo of our trading platform.